Here are the crypto top headlines covered in this video. Crypto bulls lose $217 million amid concern about Grayscale outflows. Next, Treasury officials call for action from U.S. policymakers to regulate crypto before the next crisis hits. Also, Appellate Court orders appointment of FTX independent examiner. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions. Just bring in crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: crypto bulls lose $217 million amid concern about Grayscale outflows. Bloomberg's Eric Balchunas pointed out that GBTC shares flipped to a 0.9% discount versus net asset value amid likely due to selling pressure. Futures traders betting on higher crypto prices saw some $217 million in liquidations in the past 24 hours as the approval of spot Bitcoin exchange-traded funds continues to be a sell the news event, a contrarian bet that shows no signs of slowing. Concern that crypto fund manager Grayscale is selling some of its Bitcoin as owners of its Grayscale Bitcoin Trust, or GBTC, remove money from the ETF contributed to a drop in prices. Verified wallets belonging to Grayscale, tracked and labeled by analysis firm Arkham, show that the fund moved over $400 million worth of Bitcoin to custodian Coinbase Prime on Thursday, potentially a step toward an eventual sale. Bloomberg intelligence analyst Eric Balchunas also pointed out that GBTC shares flipped to a 0.9% discount versus their net asset value on Thursday, likely due to selling pressure. Even as GBTC sees net outflows, other newly approved Bitcoin ETFs are seeing net inflows. BlackRock's IBIT crossed $1 billion in assets under management, or AUM, on Wednesday. Bitcoin fell below $42,000 late Thursday, down 3.7% since Thursday, and 15% from the December run to $49,000. It led to a market-wide retreat, with Ether falling 2.5%, Solana's SOL falling 6.5%, and Cardano's ADA down 5%. BNB Chain's BNB outperformed the market and was up 0.6%, buoyed by launch pads on the closely related Binance exchange, where users can stake BNB to gain an allocation of new projects listed on the platform. The price drop caused highly leveraged futures betting on higher prices to see $217 million in losses, with Bitcoin trades taking $88 million in liquidations alone. Liquidation occurs when an exchange forcefully closes a trader's leveraged position due to a partial or total loss of the trader's initial margin. It happens when a trader cannot meet the margin requirements for a leveraged position, fails to have sufficient funds to keep the trade open. Meanwhile, some traders said in a Friday note that they expect broader crypto markets to be range-bound in the short term. BTC is hovering above the $40,000 to $42,000 zone, which is likely to act as short-term support, said Rachel Lin, CEO and co-founder of Singapore-based Sen Futures, in an email. Overall, the past week can be summed up as the calm after the storm. The ETF mania phase is over, and the market is moving sideways, looking for the next trigger. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Treasury officials call for action from U.S. policymakers to regulate crypto before the next crisis hits. Lawmakers in the U.S. need to take action before the next crisis to develop standards to regulate crypto, a U.S. Treasury official warned on Thursday. After each financial crisis, new regulations are adopted, such as the Dodd-Frank Act and the National Bank Act, said Treasury Assistant Secretary for Financial Institutions Graham Steele. For crypto, policymakers have the ability to act before a crisis happens, he said. For crypto assets, policymakers have a chance to act before a crisis to adopt higher standards that support responsible innovation, Steele said. At the same time, it is critical that any legislative proposals don't undermine the already robust regulatory foundations that apply to financial institutions and capital markets. Steele spoke Thursday at an event hosted by George Washington University Law School and outlined his time at the Treasury Department over the past 2 years, overseeing cybersecurity, crypto, capital markets, among others. Lawmakers in Washington have been working for some time on bills to rein in the crypto industry. The focus on crypto has also come from President Joe Biden, who released an executive order in 2022 outlining the first ever whole-of-government approach to addressing the risks and harnessing the potential benefits of digital assets and their underlying technology. The order honed in on topics such as consumer protection, financial stability, climate risks, and national security. The order also tasked Treasury with writing several reports, including one on crypto. That report from 2022 called for federal regulatory agencies to monitor the sector for bad actors and issue guidance and rules. Our report noted that the U.S. generally has strong investor and consumer protection laws that address many of the risks posed by crypto assets, Steele said on Thursday. Where existing laws and regulations apply, they have to be vigorously enforced so that crypto assets and services and the consumers who use them are subject to the same protections and principles as other financial products and services. The use case. Steele also delved into the use cases behind crypto on Thursday. There are a number of prospective use cases that proponents hold out as the ways in which these products or services can be very beneficial, Steele said. Those include cross-border payments, faster and lower cost settlement, and immutable ledgers, he added. Those feel like the areas, at least in our report, that we said were the most promising, Steele said. So it's less about the crypto asset itself. Steele took a dig at Dogecoin, calling assets like that speculative. It's less about, I don't even know if Dogecoin is still a thing or not, but it's less about trading some of those things, Steele said. Davos. Meanwhile, on stage at the World Economic Forum in Davos, Switzerland, crypto executives were asked about those who say crypto still lacks major use cases. Ripple CEO Brad Garlinghouse cited his firm's focus on solving cross-border settlement problems, but added there is speculation in the sector. What we haven't seen yet, that I still think we will see eventually, is a separation of wheat and chaff, Garlinghouse said, including how technologies can be used to solve problems. The CEO also poked at Dogecoin. I don't get it, Garlinghouse said. Other than Elon Musk as the central actor, I don't see the use case, the purpose. Our next top headline, Appellate Court orders appointment of FTX independent examiner. According to the Third Circuit, an independent investigation by an examiner will let the court consider the greater public interest in ruling on FTX's reorganization plan. Months after the first filing, the United States Court of Appeals for the Third Circuit ordered the judge overseeing the bankruptcy of cryptocurrency exchange FTX to appoint an independent examiner. In a January 19th opinion, 3 judges with the Third Circuit reversed a ruling from Judge John Dorsey with the U.S. Bankruptcy Court for the District of Delaware, requiring the court to appoint an examiner to oversee FTX's case. In February 2023, Judge Dorsey denied a motion from the U.S. trustee in FTX's bankruptcy case, Andrew Vera, to appoint an examiner, leading to the appeals process. According to the judges, allowing an independent examiner to oversee the FTX bankruptcy case would provide greater transparency to potential investors for the evolving and volatile cryptocurrency industry. The Third Circuit said an independent investigation would allow the bankruptcy court to consider the greater public interest in rulings related to FTX's reorganization plan. An investigation into FTX Group's use of its own cryptocurrency tokens, FTTs, to inflate the value of FTX and Alameda Research could bring the crypto industry under further scrutiny, thereby alerting potential investors to undisclosed credit risks in other cryptocurrency companies, said the January 19th decision. FTX filed for Chapter 11 protection in November 2022, shortly after Sam Bankman-Fried's resignation and John Ray's appointment as CEO to oversee the bankruptcy. In November 2023, Bankman-Fried was found guilty of 7 felony charges. He is expected to be sentenced in March. On December 16th, debtors representing defunct crypto exchange FTX filed an amended reorganization plan in bankruptcy court, proposing compensating investors for lost assets based on their value as of November 11, 2022. The debtors later released estimates of all asset prices, including $16,871 for Bitcoin, roughly 58% less than the $40,349 price at the time of publication. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.